All right, we're going to get into the top-down analysis on NQ. We're going to take a look at ES, and then we've also got a request from someone in the Discord as well. So we're going to be taking a look at that. I'm just going to preface this. None of this is financial advice. I don't recommend you do anything that I'm talking about. This is purely for educational purposes. The point of these videos is for you to be able to watch how I navigate financial markets and pick out pieces that might be helpful to you, that might work in your strategy, but never will I recommend you do exactly what I do. This is just purely educational. So with that being said, let's jump into the top down on NQ. So we've got a break of structure here. I'm currently on the quarterly. So I'm going to drop in these quarterly support and resistance levels. Got something around here. Okay. Not too much to really go into on the quarterly. I would just kind of, rather than trying to put a bunch of information on the chart, I would more so be looking at these momentum, volatility, and volume indicators. As you all know, we are currently testing all-time highs right now, around 23,000 on NASDAQ. I'm not going to lie, my sentiment is not super bullish, and I'll get into why. Now, clearly, if we're able to break 2,300 tomorrow, that sentiment will definitely change. But as far as today, Sunday, the 13th, it's looking a little toppy to me, I'm not going to lie. All right, let's kind of tighten these areas up a little bit. So here on the daily, this will kind of give you all a better idea as to why I say that. We've got some divergence here, volumes falling off on the weekly as prices continuing to go up. Generally, in a strong uptrend, you want to see volume kind of tag along with price. You want to see price increasing and volume increasing. That when there's divergence there and the price is increasing but the volume is decreasing, it's kind of telling me that this move is beginning to get a little exhausted or a little overstretched. And we have the price action on the weekly going up and tagging these this upper band of the Bollinger Band. And then we also, so this is signaling to me that we're getting into some pretty overbought territory. So like I was saying, on the weekly, we're getting up into overbought territory on the Bollinger Band. MACD is also getting overbought. The histogram is cooling off. You can see that by this light green color right here. The dark green shows that the momentum is continuing. There's continuation in the trend that has led to this crossover on the weekly until right now. And we've got this doji candle right here. And a doji candle is a candle that has a very thin body and generally a wick above it. So it's really just going to look kind of like a cross or a plus sign on your chart. And what that's signaling is there is indecision. There is basically an equal amount of buyers and sellers, and the market is unable to necessarily push with a lot of volume and a lot of, a lot of volume and a lot of I'm going blank. But anyway, dojis just signify, the point being, dojis just signify indecision in the market and a lack of follow through from the trend preceding the doji. But it's not 100%. See, we've also got this is really not a doji. That's more of a dragonfly. There's lots of different, you could say like dragonfly. Some people might say a hammer, but I generally consider a hammer candle something with a body and a low wick and not really much of a top wick. hammers are a little bit more bullish than this, but as far as like just a textbook doji, that's what we've got right now on the weekly. So let's continue our top down and go into the daily. And as we were seeing on the weekly, we are also getting similar confluence. Confluence is huge. We need confluence as traders. We need our indicators all telling us the same story. Is that always going to be the case? No, they're not always going to be aligned as well as these are in this example. In the MACD, we've got the MACD way overbought. These indicators that use oscillators, histograms, mostly you're going to be relying on moving averages, volume, and things of that nature. So generally when you're using these indicators, you want to have a good grasp of statistics. You want to have a good grasp of there's a lot of math. Trust me, I was not a great math student, but luckily I've had mentors that are very competent quantitative traders. So I've kind of gotten bits and pieces of their side of the market and how they operate. And I started applying some of their principles to my trading, and it really just took it to another level. And what I'm referring to specifically is mean reversion. So markets, a perfectly efficient market is going to be generally as close to the mean and where fair value is as possible. Now, in instances like this, on the NASDAQ, where we are overbought, that is signaling to me that we are way above the mean of what the fair value and historically based on data where the right price for the asset would be, and the asset in this instance being NASDAQ futures, underlying being the NASDAQ, which is a group of tech stocks. So let's get back into Confluence. What was I talking about with Confluence and why is it so important? So here on the CM William VIX Fix, this is a volatility gauge. As this move to the upside from the tariff crash was picking up, volatility is increasing. We've still got high volatility going until about here, and then falling off. And this is odd. This isn't a great example. It's weird to see volatility fall off this hard and stay so pinned for this extended amount of time while the price is also continuing to go higher. But I mean, if you've been trading the past, I don't know, May was a great month for me, but June and the first week of July were not great for me. There was a lot of chop. You can kind of see that here. We're still trending upwards, but it's range bound. And so that's going to affect volatility as we stay range bound. So we've addressed this. This doesn't really give me a whole lot of confluence just because the statistical weight of the volatility being this low is a little skewed because it's been this low for a while, which is why I was talking about it being kind of weird. It's weird that it's that low while the move has continued. All right, so now we're going to go over into the MACD, and this kind of ties back into mean reversion. So the MACD, generally, this is the neutral kind of midpoint on the MACD, and these histograms are going to be either rising, they're kind of a gauge of momentum, and this is kind of bullish momentum here, obviously with the green, and then red is bearish momentum. So the deeper this histogram goes, the more strength and momentum there is behind the move that's caused it to either flip bullish or bearish. And then as you can see, we've been stuck in this range as we've been uptrending. We're still uptrending, but it's range bound. And what I mean by range bound is, let's go. I don't generally use ranges on my chart, but I know there's a range tool. I just got to figure out where it is. All right. It's not really that big of a deal, so I'll just do it manually. So what I mean by range bound is the price is kind of stuck in a channel. So price has been trading in this channel since, the beginning of May. May was a good month for me because I was short for most of the second half of May, and as you can see, there was just a lot of downside. But unfortunately, we just kind of caught support at the bottom of here that kind of established this range that's also somewhat aligned with, this was a major V bounce anyway, so it's going to be kind of it's not going to be as easy to analyze as something that didn't just come out of a crazy V move. But anyway, so range bound, what I'm saying is there's been a significant amount of time that price has stayed within this channel. And that is why the histogram is getting so tight here, because it's not really making any significant moves away from a mean. And by mean, I would just mean this kind of middle area. So as you can see, there's not a whole lot of percentage. Let's see, why is that not working? There we go. All right. The most significant move from the mean is like 2%. Now, it's going to be different. You're going to see that on the histogram, these are a lot deeper, and I'll show you why. So here's the channel that price was trading in during this time frame. And then we'll put on a mean, which is just straight through the middle, like where fair value is in this trend. And then watch this. So here we've got roughly 5% move to the downside. Here we've got a 6% move to the downside, and as you can see, the histogram is a lot deeper. These are things that are automatically kind of registering in my mind now, but that's because I've been using these indicators for so long. I mean, I could damn near take the chart off and just look at the MACD, the RSI, and the CM Williams, and probably kind of, at least, I mean, here, obviously, I would be well aware that we're consolidating, but it's probably still in an uptrend because the moving averages are so high into overbought territory. And sure enough, there it is. And so let's not get too caught up in all that, but now I'm starting to kind of open the door into why my shorter term sentiment is more bearish. So we've got the MACD on the daily falling over, and it's already kind of pushing out of this range the histogram has been in, which just kind of signals to me that it's getting to pretty much as deep as it gets in this range without cooling off and starting to flip back to the upside, which would signal to me that it was going to continue consolidating, but it's not necessarily doing that. And then we've also got the moving averages crossing over to the downside. That, along with the RSI, doing the same thing. So the RSI is in overbought territory. It is finally curling down, which is all telling me that there could potentially be a little bit of downside before we continue moving higher. All right, so now we're going to jump on the 1 hour. All right. This is where I start to develop an idea of where an entry point might be for a short or a long position, just depending on how the price action plays out the Monday following my analysis and the week, and then into the week. My top down, I don't necessarily carry my sentiment from my top down analysis throughout the entire week. It's more so just going into Monday. And then as Monday plays out, I have more data, we have more news, we have things that affect price action. So really this is more so just my way of going into the week without just jumping into the markets with no idea what the hell is going on. These top-down analyses really just give you confidence to enter into the market each week not feeling lost. We've already established on the higher time frames, things are looking like they want to cool off. And by cool off, I mean they're looking to kind of revert to the mean or even below the mean because they've been extended so far above the kind of average level, the baseline, for so long. And looking on the hourly, there's obviously a huge gap here. This is because the futures market is open now. So we got a gap down, which is interesting because I think actually when I started this video, we had not opened yet. So it's funny. I was mentioning bearish sentiment and then we opened gap down. Where are my indicators? There they are. All right. So we got a gap down. MACD is looking like it, yeah, this is looking like it wants to take another stab down. So where would I be looking to go short? Let's go into the 15-minute guy. All right. So these supports and resistances and trends are still significant and relevant. So really and truly, with this gap here, I wouldn't be surprised if price traded back into it to kind of balance out. Markets do not like leaving gaps in price action. A lot of times gaps get filled. I've noticed in crypto, just specifically, I just want to give you a grain of salt to take this information with. A lot of times Bitcoin will not fill gaps. A lot of times Bitcoin will gap up and then it is gone. It is gone. There was a pop-up from Top Step. In case you were thinking I was capping about being funded. All right. But anyway, we're talking entries here. Let's get to it. So where would I be looking to go short? This support right here, along with this trend line, gives me some, that's a sexy trade. Not gonna lie. Sorry, boys. I had to say it. Sometimes, you see someone walking down the street and you just can't help but say, God damn. But that's how I am with trades, more so than women right now. I'm about my bread. I get more fired up about high risk reward trades than some of the talent here in Florida. And there's plenty of talent, let me tell you. But anyway, we're getting sidetracked. Focus, concentration, power. All right. Here we go. So that's where I'd be looking to go short. I'd be looking to open a position. So you might jump the gun if you were inexperienced and jump into a short position as soon as this trend breaks. But you've got support right here below it too. So what's your risk reward on that? It's pretty garbage. You would be entering, oops, I goofed. There's zero risk, there's zero reward. All right, no, but seriously, if you were to open this, I mean, from here, you're targeting that support, and I mean, you're risking that. So your risk reward ratio is garbage. And I don't expect you to really understand why I say that, but why I say that is because if you were to enter here and not break this support, you don't want to enter into a trade when there's support that close on to the short side, because you're getting what, like maybe 10 15 points and risking a reversal here to fill this gap and possibly even go past this bearish order block and into this buy side liquidity, which is only going to freaking supercharge it to the upside. So the risk reward is garbage right there. Now on the flip side, if you were to enter in on the break of this break and retest, hopefully, if you're patient, which is something that takes time to develop, is patience in entries, you're getting a much, much, much better risk reward because we don't really have much support here until this level right here. So as you can see, there's just kind of no man's land. Big pool of liquidity gonna be around here. I'm definitely going to target this area because there's definitely stops. There's definitely large concentrations of orders around there. That is how I kind of go from the top down. Specifically, we're talking about NQ here. All right, let's see. How much time have we? All right, we're already 20 minutes in. Let's do a quick one on ES. I'm not planning on trading. Well, I don't want to say that. Maybe I will trade ES, but I'm kind of feeling myself this past 2 weeks. I've been I don't know, I've just been kind of killing it. And NQ is just a little bit more spicy to trade because it's just a little more volatile, and I don't know. I feel like risking it for the biscuit. But anyway, let's not leave it out. We're gonna start here on the weekly. I'm not gonna go quarterly. It's similar. It's really, honestly, it's very similar to NQ. I think instead of just going through all of ES, what I'm gonna do is just kind of show you that it's pretty much the same as NQ. Levels are in similar areas. These two tickers trade extremely closely together. When one is doing something, they're like, they're like siblings. If ES is like the older brother and NQ is the little brother, ES is going to do things more with less volatility. It's going to be more clear. There's going to be probably tighter ranges that it trades within. But that trade-off for that extra clarity is there's a little less volatility, and you're not really, you can make just as much on an ES trade, but it's not going to happen as fast. It's not going to, honestly, really the point that I'm making is I just feel like risking it for the biscuit, and NASDAQ is just more volatile, so that's really what I'm getting at. Anyway, all right. We got our levels here. We got a major order block here. OB with this line just means there's an order block. I'll get into order blocks. All these things on my chart are kind of like SMC or ICT concepts. Do I think ICT has it all figured out? No, not really. But I'm not going to lie, a lot of his information is really relevant because he's right. He's right about how the market operates and how these things dictate how market makers are going to move the price based off of where there's imbalances, and these algorithms are also, their main objective is to grab liquidity and balance the market. So a lot of his concepts are relevant and do actually provide a lot of value if you understand them. Now, if you just throw all these things on the chart and you don't know what this means, it's not going to do you any favors. But ES is kind of the same story as NQ. Like I was saying, they kind of trade in tandem. Got a little bit more of a clear trend here. We're still a little extended above what I would say is probably put it kind of like that. But it's the same story as the Q. It's a little bit extended, looking a little top heavy. All the indicators are seemingly pointing to the downside. And the thing about ES and NQ is a lot of times NQ breaks its like support and trend lines before ES, and ES has a lot more to go. So I guess what I'm saying is a lot of times NQ will be breaking a trend or a support and resistance, and ES is still kind of making its way towards that kind of corollary, is that a word? Like that trend that they share in common. And you'll get into an NQ short because you're seeing these major levels break, and then ES will find support a little bit later, and then as ES finds support, it like causes NQ to just absolutely moon back up into its support levels, which is odd. That's just kind of something that I've noticed as I've traded these two things at the same time. So just be aware of that. If I were to go short, which I am, and that's funny because I'm not going to say I would prefer to trade ES on this, because I wouldn't. I would prefer to trade NQ, but I don't ever trade NQ or ES without NQ, without the other one on the chart with it, because, and usually if NQ is falling and ES is too, but ES finds support, it's more likely that will pull NQ back up than it is if ES and NQ are falling and NQ finds support. I find that the S&P tends to be more significant as far as when they find a reversal and when they catch a bid. Let's see. I wouldn't be surprised to see ES trade up into this fair value gap here, fill this gap, and then probably we've got a break of structure here. Market structure shift is what that looks like over there. Yep. So we've got a break of structure and a market structure shift. I'm not going to get into that. Those are also bearish. It's just showing me that the market is kind of pushing through levels where historically it has respected and stayed above, but instead of respecting it, printed an order block, fell down, and not only broke the market structure from back here, we also caused another break of structure here. But with that gap, I would not be surprised to see it trade back up before coming back down to this trend line. ES's RSI is a little bit more neutral on the lower time frames. Even though, no, still on the daily, it's still a little overbought-ish. All right, so let's talk entries on ES. I want to see something like this. I would want to see this dip down into the sell side liquidity, fill this gap, get rejected probably somewhere around the fair value gap, and maybe not make it all the way up there, but it's possible. This is kind of one of two scenarios here. Either that, or it would also possibly do this and just make it up to that market structure shift before coming back down. So where I would be looking to go short, there's kind of two. The risk reward on ES here for a short play is not great if you aren't getting an entry up here. I would say this would probably be, that's not great. It's not even a 2 risk reward with that order block and previous highs. Not a huge fan of this. I personally would probably not be taking that trade. If it played out more so like this, where it is testing that fair value gap and you still have your stop loss at the most recent high and that bearish order block, you're getting a much better risk reward. If it were to play out something like this, I would honestly rather just sit on my hands for an hour or two and wait for something like this to go long on ES. Because, I mean, my bearish sentiment is only like an intraday type thing. Like, overall, I'm bullish because we're testing all-time highs. But as far as, like, tomorrow morning, what do I expect? I just kind of expect this to cool off a little bit before it finally takes that next move. And, you're getting really good risk reward on a long setup here from this trend that's going back to the daily. So that's why top-down analysis is really important, I find, as a intraday trader, because I wake up Monday morning, I'm not having to wake up super early and do these analyses and scan a bunch of news and do this and that. Like, I've already done the work that I need to do going into Monday. On Sunday, I generally put in these entry points on my chart as pretty much to set myself up for Monday. So there's really nothing I have to do on Monday other than just wait for price to get around one of my entry points. So that will wrap up ES. If you're following along, NQ seems to be a better short, in my opinion. If I were to short NQ, I would just be watching ES to find support at this daily trend, and then I would probably close out my NQ short as soon as ES made it to that. My game plan would probably on Monday be short NQ while ES finds support at that trend line. and then close my NQ short and then go long ES from that trend if it can test and hold that trend line. But who knows? None of that could play out. Okay, let's get on to the... Wait. I know that man did not ask me to analyze Roblox. Hold on. I can't remember the ticker that he asked. Let's see. Okay. RKLB. Rocket Lab. I've actually not been tapped into the New York Stock Exchange that much. I've been in the CME trenches for months now and haven't even been trading New York. Okay, let's see. So, man, this looks pretty good. All right, let's get some levels in. Got some volume imbalances. We've actually got quite a few. And on the weekly, that just shows me there's a lot of volatility and momentum in this right now. All right, yeah. Just from going from the weekly to daily and then down to the hourly, what I'm seeing here on Rocket Labs is... Honestly, I would just be expecting a retracement. Kind of looks like we're in a... I'm not going to get into Elliott waves, but what I'd be looking for on this ticker in particularly is to go and make a... possibly fill this gap here or find support right around it in this volume imbalance here. And then, establish a higher low before making another move to the upside. It's because the daily's rolling over a little bit, but the weekly is screaming upside. Weekly is screaming upside, in my opinion. But with that hourly and daily, it looks like it is wanting to retrace and probably find support somewhere around this volume imbalance. But I mean, that's fine. If you're already in a position, I would say that's a good place to average down, hypothetically. I have to be careful with what I say, but I would be looking to add to a position somewhere around here. And then if this did not hold, and you'd probably be looking at some significant downside if this level didn't hold. I would be keeping an eye on 34.38 and 35.73 as far as areas that you would want this to be able to hold. But if it does test this area right here and then consolidates, I would definitely be expecting another leg up. So as far as this one in particular, to me, it's looking like this just needs to cool off after a strong impulsive move to the upside, potentially test this fair value gap at the worst case scenario, 30.32. But I don't see that. I don't really see that happening. By the time this moves down, this basis line for the Bollinger Bands is going to be pretty much right around this volume imbalance. So I think what you're looking at here in the coming days is a test of this area and then potentially another stab to the upside. When is that going to happen? I don't necessarily know, but I would just be expecting a little bit of consolidation and retracement here. I wouldn't be getting worried unless you lose this level from this most recent market structure shift, which is going to be around 32.60. So above 32.60, I'm bullish below 3260 and 3039. I would be looking for probably some serious downside. You're talking at least 13%. Worst case scenario, 37%, so be careful. Historically, this does not lose the bottom band on the Bollinger Bands. So I wouldn't necessarily expect this to come down this low. Everything on the higher time frames is looking bullish. So where the hell? All right. So yeah, there's Rocket Labs. That is going to be it. We will have a live stream on Monday tomorrow where I will be live trading. And other than that, please like, comment, subscribe, and have a great rest of your weekend. And good luck. Good luck in the markets, everyone.